Alarm bells going off on Wall Street today. Amid concern, the U.S. may be forced to submit to more than $1 trillion in automatic spending cuts. For the details, we're going to go down to Deborah Kostroun at the New York Stock Exchange. Deb?
Thanks a lot, Mike. Yeah, stocks were lower, and at one point the S&P was down 32 points at its worst level. The Dow was down 342 points. So as you can see, we didn't close on the lows, but certainly the market was lower as all the focus was on Washington. The Supercommittee did not reach a deal on the deficit cutting plan. Of course, that means that $1.2 trillion in automatic spending cuts will take effect in 2013. Now, the big concern from Wall Street is that the failure of the Supercommittee to reach that agreement might mean that the market may fall even further. According to David Kostroun of Goldman Sachs, he is looking for the S&P to hit 1,100. And of course, that is a long way from the 1,192 where we closed out in today's session, Mike.
Well, Deb, after the bell, we had earnings from Hewlett-Packard, better than expected.
Yes, well, the earnings were a little bit better than expected, but as you can see, the stock moving around here just a little bit. It was lower, now it's higher. Also, Hewlett-Packard, they forecast for the first quarter the profit that may miss analyst estimates. And remember, Meg Whitman just stepped in as CEO, so the concern is that the slump that led to the ouster of the former CEO may not be over, because HP is suffering as consumers cut their spending on PCs, and they've been opting for those tablet computers. Also, businesses are cutting their spending on technology services as well. Getting back to today's session with all the focus on Washington, and we did see the market falling. We saw all 10 economic groups lower, with financials, industrials, and technology leading the way lower for the S&P. It was our longest decline since September. That's it from here. Mike, back to you in the studio.
Well, thank you, Deb.